The problem from this video can be downloaded at accountingworkbook.com. If you go to the website, click the PDF link and you can download a copy of this and all of my problems for yourself. Now, if you check the website and you click on videos, you'll see there are more videos than those I've listed publicly on YouTube. You can see that there's every problem covered in the workbook has either a public video or a members only video. If you'd like access to the members only video, just click the join button beneath the video player on YouTube. All right, let's jump into the problem. Let's take a look at problem 4.1a. This problem has us preparing a bank reconciliation and then the journal entries related to that bank reconciliation. But let's start with the bank rec. So the question says, ZipFlyer Inc.'s Cash T account for May shows the following information. There are some deposits, which are money coming in. Obviously, debits on the left, money coming in goes on the left. Credits to the right, money going out goes to the right. And you can see the ending balance of our cash. It's a debit balance of $14,000 and change. Now we get the bank statement for the same period, and we have some money coming in, money going out. Something I want to always caution students about is when you get a bank statement, if it talks about debits and credits, whoa. If I see that on a bank statement, I just ignore it. I just will not look at a banker's version of a debit and a credit because it's different from an accountant's version of a debit and a credit. So I just ignore it. In fact, they do the opposite of what an accountant does. So I just sort of say, okay, is our money going up or going down? And if a banker talks about debits and credits, I tune them out. So anyway, we look at this bottom of this bank statement, and we see there's $16,707. So when we get to the bottom there and see that these numbers don't match, we have to say, oh, why don't they match? This is interesting, right? You would think our Cash T account would match the cash balance on a bank statement for a given period. But of course, we know these amounts are never going to be equal, and it's up to us to figure out why. That's what a bank reconciliation is. It's the accountant figuring out why their cash balance, according to their records, doesn't match the cash balance according to the bank's records, and just being able to explain those differences. Okay, so I guess we can just read the additional information. It says the correct amount of check number 80, a payment of an account payable, is $468. ZipFlyer's bookkeeper made an error. Let's see, check number 80. I see what's happened here. We've written 486. The bank has said it's 468, and the correct amount is 468. So we got it wrong. Obviously, there's going to be an error to be fixed on our side, right? We've made a mistake. B, the bank collection was a note receivable. The noted principal of $4,000, interest of $300. Okay. I think we're ready to go. I'm actually going to leave this thing I've highlighted, this 468 versus 486 thing, to the very end of my bank rec. Just fixing our error is a little bit tricky, but I think the rest of this is not too tricky. So let's begin with a title, and we'll start with the name of our company, ZipFlyer Inc. Name of the statement we're preparing. We are preparing a bank reconciliation. And a bank rec can just be dated May 31st, 2024. So, remember how a bank reconciliation works. What we're going to do is almost divide it up like a balance sheet. The left-hand side is saying, here's what the bank thinks our cash is, and here's why the bank is wrong. Here's everything the bank missed. The right-hand side is going to say, here's what we think our cash is, and here's what we've missed. So let's start with the bank and figure out what the bank has missed. So we say ending balance per, and per just means according to, bank statement. So the ending balance, the May 31st balance, according to my bank statement, is right there, 16,707. So that's going to be my starting point for my bank reconciliation, 16,707. Now I've got to say, what did the bank miss? Well, let's go through all of our T account and see if there's anything in our T account that the bank doesn't know about. So we'll go through them one at a time here. The opening balance matches 13,846 on our side, 13,846 on the bank side. That's important. If they don't match, we might have items from the previous month to clear. If you want to see an example where the opening balances don't match, problem 4.2. We go through one where the opening balances aren't going to match. This is our first problem, so it's a little bit easier and gives you a bit of a boost there to start. But you'll see it's not that much harder. Okay, so the matching deposits, 1550 on our books, 1550 on the banks. A deposit of 2700 shows up on ours, shows up on the banks. 4950, that shows up on ours, shows up on the banks. 2600 is on ours, 2600 on the banks. 3000 is a number on our T account that is nowhere to be found on the bank statement. Now you might say, well, what about this 4,300? Well, that's something on the bank statement that's not in our T account. We'll deal with that on our side. That's something we've missed. That's not something the bank has missed, though. Right now we're worried about what did the bank miss. So the bank missed a $3,000 check, or a $3,000 rather deposit. We call that an outstanding deposit, or a deposit in transit. Oops, let me change my ink color here. Deposit in transit. And I usually put in deposit number or a date, and in this case it's May 31st. May 31st. It's $3,000. Now if I had several, I would list them on the left and total on the right, just like I would do a balance sheet. Now let's do our outstanding checks. Let's see if there's any checks that I've recorded that the bank doesn't know about. Okay, so check number 75 for $550. Yeah, the bank knows about that check. For $875, yep, the bank knows about that check. Check for $1256. Yes, I see it there. A check for $3684. Yes. Check for $1100. Yes. Check for $486. I'm going to put a check mark beside this, and the only reason is it's not outstanding. The bank knows about it, right? The bank hasn't missed this check. This isn't a check that the bank's waiting to cash. It knows it's there, and so it's not an outstanding check. It's something else. This is a bookkeeper's error, and as we said, we'll fix it on the other side of the bank rec, but this isn't something the bank has missed. And remember, this side of the bank rec is all about what has the bank missed. A check for $548, I think the bank doesn't have that one. A check for $3058, that the bank does have. Check for $1244, definitely the bank has that. And the last few checks the bank does not have, and this is very typical. The last few checks, just by their nature, if you write a check at the end of the month and you send it out, you lick a stamp, odds are the person doesn't cash it until the next month, and so these end up being outstanding checks a lot of the time, and that's where you spend a lot of your time as an accountant looking, right? You look at the end of the month checks more than you do the beginning of month checks. Well, that's where you find the outstanding checks anyway. Okay, so we have our outstanding checks. Those are the 4 items I've circled. Let's list them. Ugh, I gotta remember to change ink here. Outstanding checks. And I'll just go by numbers here. 81, 84, 85, 86. And because there's a list of them, I'm going to list on the left, total on the right. 548, 983. 68 and 175. So let's total this up. 548 plus 983 plus 68 plus 175. My total outstanding checks here is 1774. Okay, so I've got to say to myself, this ending balance per the bank statement, when they learn about this deposit in transit, is it going to add money to my bank account or deduct money from my bank account? And the answer is when they learn about the deposit, it's more money in my bank account, right? It adds to my bank account. Now, when they learn about the checks, it's going to subtract money from my bank account, right? My bank account is going to go down because they're going to draw out those checks, right? Somebody's going to has a claim on my bank balance and they're going to take it out. So I put this in brackets because I'm deducting it out. And this brings us to our bottom line, our reconciling balance. And our reconciling balance here is just adding down this list. 16,707 plus 3,000 minus 1774. I get 17,933. Just double check that number. Yep. I was worried I'd misread it. Okay, so I can put dollar signs at the top of each column and beside the bottom line, and I'm well on my way here to a bank reconciliation. So we've said the left side is here's what the bank thinks our cash is, and here's all the stuff the bank is missing. The right-hand side is for what we've missed. So we're going to say, here's what we think my cash balance is, and we'll call that balance per, or I'll say ending balance, I guess, just to be consistent. Ending balance per books. Now I say ending balance. We could say May 31st balance or whatever. Just, to make sure this lines up. But in any event, ending balance per books, just to be consistent between the two. And the ending balance according to our records is right there, 14,619. 14,619. And now we've got to say, is there anything on the bank statement that we've missed? So I could go down, everything obviously with a check mark beside it was already on the bank statement, but anything that hasn't been checked off, it warrants a little bit of scrutiny. So we have this item, that $600 withdrawal, and I've just looked down this column here. I don't see a $600 withdrawal. $4,300 deposit, which we already established was not there. $300 withdrawal, $100 withdrawal, and this 5 and this 1. So these 6 items, plus we have this this different amount. Those are all things that are going to warrant a little bit of a closer examination. We'll start though with this NSF check W White, and the NSF check represents something that's on the bank statement that is not on my books, so I need to make note of that. It's a $600 cash withdrawal, so 600 bucks to the negative. Next up, this bank collection of $4,300. Now that one had a little memo about it. Oh, by the way, NSF check, if you weren't sure what that was, NSF stands for non-sufficient funds. What this means is a customer has given me a check that bounced. They gave me a check, they paid for something, and they didn't have enough money in their bank account to cover it. And so when I went to cash the check, the bank said, sorry, no, the guy doesn't have the money. And they took the money, pulled the money back out. Bank collection rather. There was a note about that. It says the bank collection was a note receivable. The note included principal of $4,000, interest of $300. No previous interest accruals had been made on the note. Okay, so the fact that there's some principal and interest is going to matter for our journal entry, but it doesn't matter here. All that matters here is the amount of money that changed hands. We got $4,300 in cash. Continuing down the line, the next one is an EFT utilities bill. EFT stands for electronics funds transfer, and all it means is we paid our utilities bill with like online banking or some automated payment, and it just automatically came out of the account. $300. The check, $468.46. I'm going to save that till the very end. EFT telephone, another bill, just another sort of automated payment, came out of our account for $100. Bank plan fee. Well, this is money again coming out of our account. $5. And interest, $1. And the interest helps your bank balance. So the only thing we've got left to deal with is this check number 80 for $468. We have mistakenly recorded it as a check for $486. We screwed up. So again, we said, well, what did we say here? We said credit cash 486. We should have said credit cash 468. We're off by 486 to 468. That's $18, right? And the question I always ask is, did I credit cash too much or too little? And the answer is I credited cash too much, right? I credited cash 486. I should have credited cash 468. So to fix this, if I credited cash too much, I got to debit my cash. By $18. So I need to increase my cash by $18. So heading down to here, what we would say is to fix the bookkeeper's error, our cash needs to go up by $18. I need to add $18 to my cash. So again, this is going to be a confusing concept, but basically all we're saying is I took too much money away. Now I got to put money back into cash because it's just an error on the bookkeeper's part. Putting money back in is a debit to cash. If I didn't take enough money out of cash, you can make an error in the other direction. It's the exact opposite, right? If I didn't take enough money away, well, guess what? To fix it, I got to credit cash. I got to take more money away. But in this case, I took too much money out of the cash account. I got to put that $18 back into the cash account. How do I put money into a cash account? I debit cash. So our reconciling balance here, well, let's hope it works. Let's add this thing up. So 14,619 minus 600 plus 4,300 minus 300 minus 100 minus 5 plus 1 plus 18, 17,933. Ah, look at that. It does work. 17,933 is the reconciling balance, $sign at the top and bottom of each column. So there we have our bank reconciliation for ZipFlyer. In the next part of the video, we're just going to do journal entries related to this bank reconciliation. Stay tuned for that.